Guys, Cameron here with Emerson Property Management. Every week I bring you tools, tactics, strategies, lessons I have learned, things that have helped me build up a sizable portfolio in about 2 years and now manage that portfolio. Today, guys, I want to talk about downturns. And I want to talk a little bit about the cyclicality of the markets, just economic cycle in general. So this is going to be a little bit more high level. And I think it's going to create a lot of opportunity for people who have their heads screwed on the proper way and aren't over leveraging, overextending, and are looking at over the next 12 to 24, 36 months as could be a prime opportunity. So going to talk a little bit more high level today about that, and then how you guys can profit from that, or at least how I believe owners can profit from that. We'll get into that, and then we'll close. So before we get into that, appreciate you guys for tuning in. Really helps us out. And just like, subscribe, share if you find value in it. If you don't, please don't do it. Let us know below what we can do better. So let's get into this. Now, I'm sure you all have heard this quote. If not, here's a new one for you. Hard times create strong men. Strong men create good times. Good times create weak men. Weak men create hard times. So this, now, again, this quote was, centuries ago. So, men, people, the sexist bastards back then. So strong people, strong men, good times, weak men create hard times. And this just goes around and around. So how does this relate to what we're going through today? If I had to guess, I would say we're in this area right here. Good times are creating weak people. And substitute men for people, and in this context for investors. So they create weak investors that are then going to create hard times. So we're somewhere on this side. I think we can all agree. Good times, the good times were rolling, baby. When it was 2, 3, 4% interest rates, you were buying property, and then 1 year it goes up 20% or 15%. You could list it, get multiple offers. Property values were going up and up and up. Rents were going up and up and up. And that's happened over the past damn near decade. So now the good times are starting. They were making a lot of investors do really stupid things, right? You could buy a property at 110% ARV. You could buy a property that didn't cash flow. And over the next 2, 3, or 4 years, you were bailed out. But the principles that you did that with are now creating weak investors. So if you look at this from an investment standpoint, these good times, people rest on their laurels. I normally want to buy at a discount, but the market's going crazy, so we're going to buy it at 100% market value. Or, it about breaks even on cash flow, but hey, and I don't have any other money to throw at this. I'm going to do a low and no money down strategy. I'm okay. I'll swing it. We'll see what happens. Well, you were bailed out over the years, but now it's coming to roost. 8% interest rates. We have the largest interest rate hike in history over the past year and a half. So property values are getting a little wobbly. In some areas, they're down double digits. Some places they're moderating. Some places they're still slightly positive. But across the board, I think we can all agree that if you're an investor, you should be very, very concerned, or at least conservative in what your projections are going forward. I think anybody who was doing 5, 10, 15% market appreciations, 2 or 3 years ago, I think you need to throw that out. We need to get back to the normal 2 or 3% appreciation rates. So the folks, when the good times were rolling over the past decade, I think this was creating weak investors. And now I think these weak investors are going to create more difficult times. So these weak investors that we've already seen, and especially in Houston, there was a huge company that just gave back hundreds of units that they couldn't cash flow on. They couldn't make it work, so they handed it back. There's a big lawsuit over that, and all this on these acquisition folks that pull money together, these LPs. So it's happening now. And I think now how far we get to hard times, or what hard times means, I'm not sure. I can't tell you that. I don't know exactly what that means. But I can tell you this, that if you let the people, and this is what I want, if you guys are listening to this and you actually heed what I say, I think you really can come out ahead here. If you use the same principles the same strong principles and fundamentals when you were investing, when things were going kind of sideways or not 100%, crazy appreciation, when things are normal, if you guys use those same investing principles over here, you're going to skip the hard times. While everybody else is losing their property, while everybody else can't cash flow, while everybody else can't refinance, while everybody else is getting their stuff taken back from the bank, you, using your sound business principles and just investment principles, can skip that and look for opportunities. There will be opportunities when this hits. There are some people, I'm not a doomsdayer by any stretch, but there are some people saying that we're in a really serious situation here, that student loan payments have restarted, that interest rates and credit cards, that they're gone up. So you have the average credit card interest rate is over 25%. And it's like 1.6 or 1.7 trillion dollars. It's the largest balance it's been, whether since '08 or maybe in history. So I think there are a lot of things coming to roost. And for you as a property owner, a property investor, if you can maintain those principles that created good times and not get too excited and, oh, I don't need to worry about that, I don't need to hold back any money for CapEx, I think in these hard times that we're going to go through at some point, that you're going to skip and we're going to go right back to good times. You're going to be able to pick up property from the people in those hard times. Somebody's got to suffer. Somebody's going to be, you all know the people that were buying a property at a 4 cap or a 5 cap or just paying 110% of market value, and they didn't have any idea what the hell they were doing. Those are going to be the people that, hard times, they had a weak strategy because they didn't have to worry about it. Property values and everything were going crazy. They're going to be the ones in the hard times. And the people that had the strong values are going to be able to pick up and turn those distressed assets into something beneficial, creating good times. So downturns, y'all, are where everybody shines. Everybody talks about that. Warren Buffett, buying when there was blood in the streets, all that crap. It's hard to do because if it was easy, everybody would freaking do it. So now I would say, and you're going to have a lot of people telling you otherwise, just take a step back. You don't have to buy multiple properties every year. I'm not saying don't buy any properties now. This is a good time to pick up some fantastic assets that some of the people are scared of, but not doing it in a way where you're waiving inspection contingencies and you're going with low and no money down. You have super leveraged. Especially if you're not that experienced, this is not the time to do that. This is the time to play a little defense, build that cash position, deleverage. Those are opportunities and things that I think are going to make you stronger so that when the economy does come back and property values take off, that you'll be in a good position to take advantage of some of that. Or if things go further south, you'll be in a stronger financial position to pick up assets at 50, 60, 70% of market value. So I know that was high level, y'all. There wasn't any specific tactical information in there, but this quote comes up from time to time, and I think it's a fantastic quote. So it's hard times create strong men create good times create weak men, and weak men create hard times. And this just perfectly resembles our economic cycle. And as an investor, you do not want to be the one who had a weak strategy. You want to have that strong financial position, that strong investment strategy, not get over leveraged, not just buy something because you saw some pro forma somebody ran. Continue to protect your financial position and build that war chest, and then get ready to take advantage of opportunities that come out of these hard times. I think we're in here somewhere. We're in here somewhere. So I hope that was helpful. If it was, let me know. If it wasn't, let me know. If you disagree, I would love to hear your response as to why. Appreciate y'all. See you next week.